Hi, it's Connie here from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. I just don't know how time flies. We are already towards the end of March. If you are self-employed, you know the financial year 2021 is almost finished. Now, if you plan to borrow money to do whatever, this video is for you because I'm going to cover some very important information and tips for you so that you can well prepared. Firstly, let's clarify what is the self-employed. So if you have a trading company or you are sole trader or in a partnership, then you are self-employed. Now, in order for the bank to determine your income, they will need some information to prove. One of the most important documents is the financial statements. So that consists of profit loss report and balance sheet. Now, normally in the past, before COVID, the financial statement can be used for up to 18 months. What that means is if you have financial year 2020, you can basically use it until September 2021 because that financial statement that covers up to 31st March 2020 and you add 18 months, that's September 2021. However, we had COVID, right? Now, we all know most of the business were impacted by COVID, different degree. Now, even though most of the business have recovered from COVID, luckily, bank still want to know the up-to-date information about your business. So you can't wait till September to get your financial 21 done. Banks will require it as soon as April or May. Now, even now, I've seen one bank already ask for year-to-date, even though we almost finished the 21 years. So what's the point of doing year-to-date? Why not wait March to finish and then we do a full 21 year. But no, you can't just 2020 year financial. You have to provide year to date. So it just shows, how tough it is these days for business owners to prove the income. There's a lot of paperwork involved. So my recommendation is once we finish March, after the Easter, provide all the information to your accountant and tell your accountant to prepare your financial statement as soon as possible, okay? If you are looking to borrow money in the next few months. I always get asked by business owner that the question is how much I should pay myself to help improve the borrowing capacity. Now, it's actually not a simple answer because what the bank looking at, the most important figure is the profit before tax. And then they add back your salary or wages and dividends, etc. So it's really not just about your own income. They will look at the business financials and add back the profit. So it's really about the overall picture. If you reduce your payment to yourself, then your profit is supposed to increase, right? Because the profit is after your shareholder wages and salary. So it's really about that big picture. I hope that clarified that question. Now, in terms of how they assess the income, as I mentioned, it's the profit before tax, before shareholder salary, wages, dividends. But also there's a lot of other things goes into it. Now, in reality, what the bank really want to know is about the cash flow because what can service the loan is the cash. Profit sometimes doesn't equal to cash, right? For example, if I have an IT company, I provide IT solution to clients like companies. Now, I probably my team deliver a service to my clients and send an invoice to the clients, but they may not pay immediately. The invoice says you can pay next month. So that means, yes, I recognize there's a sale here, but it's not a cash until next month, right? So then we need to look at your account receivable. Because let's say in that scenario, my clients never pay me. Then it's a bad debt, right? So the sales is no cash. So it's important that we need to look at in conjunction with account receivable. So the bank will assess, how big is your account receivable, how old is account receivable. Every industry has a different standard. Sometimes over 1 month is, can be, it's alarming, signal. They may not pay you for whatever the reason. For some industries, 2-3 months down the track, they're all different. So we need to look at the account receivable and make sure you still believe this money will be collected in the end and converted into cash. And the second factor is any existing debt or loan the company borrowed. Most common loan that I see from the financial is the car loan or loan for purchasing equipments. The bank need to assess what is the principal and the interest rate payment, and they will deduct that figure from your profit, because before you borrow more money, you need to service your existing loan, including your company loan. So existing debt under your company or sole trader, it will affect your borrowing capacity. And lastly, they will look at the shareholder drawings. Let's say you keep drawing money from the company, then the company won't have sufficient cash to repay the loan. The shareholder drawings will be assessed very carefully. Now, apart from these, if your business has already traded for more than 1 year, they will look at the previous year and they will see, how the year-on-year kind of comparison looks like. They will compare the sales figure and see what the changes are. Gross profit, normally it should be quite consistent. If not, we need to explain so that they can, assess the business performance, why it's dropped or why it's increased. Also, fixed cost, they want to see what's the change from year to year. Fixed costs generally not change much, but you can have, let's say you hire new staff. Your sales figure may not reflect the investment, but your fixed cost has increased significantly. So that's another kind of key numbers. They will look at it. Lastly, they look at the balance sheet and see if you have negative equity. So negative equity means you owe more than you own. So again, it's kind of a signal of your business cash flow. They definitely want to know what caused that and what's your plan. So as you can see, there's a lot of factors goes into assessments if you are self-employed. It's important that you understand financials so that we can have a better understanding about how your business is going, and also it's easier for you to understand why the bank assess your income in a certain way. Now, finally, I just want to quickly cover, apart from the financial statement, what are other documents you need to provide to the banks. So they include your last 6 months bank statements to show the sales figure and cost figure. So it's just a transactional account for your business, and your business credit card statements. Again, that should have other expenses as well, so they will take into account. The next documents is your JC return for the last 6 months. They want to compare the sales figure against your latest financial, just to see, what is the year-to-date look like for your business. And then they also require IR3, which is the shareholders' personal tax summary, and IR4 for the company tax summary for the corresponding year, financial year that you provided financial statement for. So for now, it's the 20-year and the 19-year financial and the IR4 statements and IR3 statements. And once we finish the 21 year, it will be 20 and 21 year, both years. Okay, as a business owner, to borrow money, it definitely requires much more documentation and more in-depth assessment. I don't want your assessment to be delayed because you don't know this information. So that's why I just want to share with you close to financial year end so that you can prepare in advance and fast track your progress. Now, I'm more than happy to help you review even the draft version if it's become available, just to give you an idea what the indicative assessment outcome, and then you can finalize your accounts. For any inquiries, feel free to get in touch with us. We are very happy to help you as much as we can. Thank you so much. I will see you next time. Bye-bye.